SpaceX is about to IPO, and everyone has the urge to jump in. In this episode, we talk about why we should take emotion out of it, especially if you're approaching or living in retirement. Watch it all the way. We hope you've been enjoying all the episodes from the Secure Your Retirement podcast. If you'd like to keep learning and receiving these episodes, then hit the subscribe button and turn on notifications by hitting the bell so you receive alerts when each episode comes out. We've helped thousands of listeners get on the path to securing their retirement. Now it's your turn. Let's dive in. Welcome back, everyone, and thanks for tuning in on this Monday. We've got a great one for you today. There's a lot of talk in the news about SpaceX and the IPO, and a lot of client questions coming our way, and other advisors that we're friends with asking, what are you guys doing? And so I wanted to kind of just take a minute to take a step back and let's just talk about IPOs in general and how they historically have operated and kind of build a framework around a decision that I think is it's one that is enticing. The decision of, do I buy SpaceX when it does come out? There's some bandwagoning that's happening here, some fear of missing out that's happening here, and at the end of the day, where I was actually at a conference not too long ago and listened to a fund manager, and I think from everything that I'm gonna say, it kind of boils down to, are you making a trade on SpaceX, or are you investing in SpaceX? Those are two different things. A trade is in most cases, a quick turnaround for just trying to play the market and make some money in a short period of time. Whereas investing, most people look at investing as long-term investing. And do I believe in the company? And do I want to get in early and take that risk of where it could go? But if I believe that has a long-term value, then maybe it could be worth it. I can't answer that question for you. So yeah, that's the gist of what we're going to be talking about today on the podcast is SpaceX and the hype around it. SpaceX going public here in June in 2026. And it's just an amazing number to hear. I'm sure you've heard it already. It's all over the news, the media, the radio, everything right now is talking about this insane valuation that SpaceX is going to come in at, somewhere between 1.75 trillion, upwards of $2 trillion is what the valuation is, and the largest IPO in history, which is while it's an astronomical number, it's also a number that is, I think we're going to start seeing more of. Right behind SpaceX, there's the potential of two other very large companies that people have heard about, one being OpenAI. OpenAI is known for ChatGPT, but they've also got a lot of other things going on. And Anthropic, who is known for the AI Claude, both have the opportunity to start that process for also IPOing this year. So I think those numbers are going to be pretty substantial as well, upwards in the trillions too. And so one thing I want to be very clear about here today is I'm not here to tell you that SpaceX is a good or bad investment. That's not what today is all about. What I want you to think about is, and with any other IPO that comes our way, especially as they get bigger and bigger, that we're making clear-headed decisions around the financial plan and not emotional ones. So let's just start with the basics of what SpaceX is in the picture. I think a lot of people hear SpaceX and picture rockets and Elon Musk and assume the rest, but it's worth understanding what you're actually buying if you put money into this company. SpaceX has three business areas. There's Starlink, which is the most popular one that people know about, and it also happens to be the only one that's making money of the three as far as profitable revenue. Starlink is that satellite internet service, the rockets going up, rockets coming back down. But then there's also a space operations division and then an AI division. And currently those are still very much in the innovation phase, and they're growing those legs. But, one of the things that SpaceX believes is possible alongside Elon is the ability to get to Mars and actually start to live on Mars. So that is a big long-term goal of the company. But there's no profitability on those two legs of the business yet. It's really Starlink that's the one that's making money. So when you hear about a $2 trillion valuation, just know that a lot of that number is based on what people believe SpaceX could become, not what it's earning right now. And the market is pricing in a future that hasn't really happened yet, which is where some of the, I guess, the word of caution could come to play with this particular type of IPO. And I think the same is going to be true with Anthropic and OpenAI if they end up going public as well. A lot of it's going to be based off of what could happen with these companies, based off of what their goal is. But that's a lot of what ifs to reach these massive, massive valuations. And it could play out the way that everyone hopes. From where I sit, I think the three companies are incredibly innovative. I think they've got a lot going for them, and they're really leaders in their industry. So, could everything come true and we end up on Mars and all these three companies are kind of running the tech space? Could it be true and the valuation ends up being even higher down the road? It's a possibility. Could it also have a lot of issues along the way that could make this $2 trillion valuation incredibly overvalued? Well, that's just the thing is that that's how the stock market works and that's how investing works, and there's a risk and reward. So let's just talk a little bit about history of IPOs, and I'm not going to go deep into history, but I did pull some data on the last 30 major IPOs that have happened over the last 15 years. And I think the data here is really important, and most people haven't seen it. You hear the headlines of the cool companies and the names that do IPO, and then we kind of don't spend as much time understanding how they operated within that first year of going public. And then was it a good launch? Was it a bad launch? Was there a lot of volatility involved? Um, and so what we see historically is the first month, and again, this is a limited 30 companies over the last 15 years, but they're large IPOs. The first month actually looks decent, median returns in that 3 to 4%. So nothing fantastic, but the first few months is there has been an uptick in the stock pricing because I think a lot of the hype around and everybody wanting to get in as it becomes available on the platforms. And people feel good about their decision that they got in early. But then something happens around the 6 month mark. By 6 months, the median return drops to a -9%. So we were kind of in this positive 3 to 4, and then now we're down to about a -9%. And here's the big one is there's an average maximum drawdown. So what that means is from the peak price of the company to the low price that it hit in a period of time. And if we look at the average maximum drawdown in a 1 year from IPO, the average has kind of been in this 50 to 55% window, a negative drawdown of that much, which is pretty substantial. And so I'm going to say that again because I think it's worth sitting with. On average, major IPOs lost more than half their value at some point in the first year. Not every one of them, but that's the average. And if you're 62 years old and that's a meaningful piece of your savings, that could matter tremendously. And so just in the data right there, if we are leaning towards getting involved with some of these IPOs that are coming our way, we need to be very careful of how much, right? The question of yes or no, do we do it? But then the next big question of how much, because there is historically a tremendous amount of volatility that comes, especially in the first year. And, the reason why it happens is think about the people who have built these companies, and a lot of their compensation structures have been built on a stock. They've been granted stock options, restricted stock units, RSUs, a handful of different ways that they're compensated through equity in the company. And they're also limited to what they can do with it, mainly because it's not public yet. So it's not easily tradable, or they're restricted from trading it. But when a company goes public, there are guidelines and timelines as far as when you can start as an employee of the firm, start selling. And usually it ends up being around 6 months. Well, the data that I just shared with you is that, by the 6 month time frame, we're seeing drawdowns starting to happen, and they're somewhat linked together, I would say. So let's just imagine for a second you're one of these young employees that has been at SpaceX for a while, and you've accumulated a good amount of stock, and now you've got this business valuation that's backing, and so your stock value and price has gone up tremendously. Although to you it feels like it's on paper because you're not in a public place with that provides liquidity yet. But all of a sudden you go public, and what we are going to see is a lot of these employees becoming millionaires and double digit millionaires overnight just because of how much equity they have in the company. And so any prudent, reasonable investor would say, well, I can't have 99 or 98% of my worth in one stock. So I'm no matter how much I care about the company, unless you are someone like an Elon that owns a lot of it, prudent investing would say I need to start diversifying away. And when that 6 month window opens and the restrictions start to get released, that's where we start to see the drawdown as people within the company and people that own large portions of the company are going to start liquidating and selling. And so naturally, the stock price starts to trend down. So it's just something to think about there. At months out, only about 43% of the major IPOs are positive. So again, that's about almost a coin flip that they are positive 6 months out from their IPO. Um, and I know that there's been some very incredibly successful ones, and I'm not saying again that that SpaceX could not be or could be. That's not what I'm saying. I just think there's a lot of evidence in the data to not make a rash emotional decision. I come back to what I said earlier: is are we making a trade or are we investing in the company? If we're making a trade, well, there could be moments of volatility to make some short-term plays, and if you're a day trader or something like that, then there could be a lot of opportunity. But if you believe in the company, you like where it's headed, and you want to invest in it long term, that's a completely different decision. I think something else that's not being talked about is the funds that are going to end up having exposure to these companies like SpaceX. So think about the ETFs, the exchange traded funds, and the mutual funds, and even the index funds and retirement plans and things like that. Eventually, as SpaceX gets added to the index, well, if you're in index funds, it has to represent the index itself. And so eventually SpaceX will be added to your investment portfolio if you own that index that it's in, which is a NASDAQ. So if you didn't think about that, and you are actually, maybe you're an incredibly passive investor that has a bunch of different index based funds or ETFs, and maybe there is a lot of overlap, you could end up owning more SpaceX than you even thought about. And on top of that, maybe you decide to go buy SpaceX as an individual position as well. And now you've just added even more exposure to a company. So I think that's important to think about a little bit is in my portfolio, the way it sits today, will I already get exposure to SpaceX? Because the thing about when you buy in funds, ETFs, mutual funds, index funds, you don't have a say as far as what stocks go into it. You get whatever the index fund needs to match the allocation of the index. So if SpaceX inherently is going to be one of the largest holdings in the NASDAQ because of its valuation, it's going to end up being one of the larger holdings in the index funds that carry it and the ETFs and the mutual funds that choose to carry it as well. And so, I would encourage someone to think about how their portfolio is already set up to automatically get this exposure once it gets added into into the funds itself. But there is also always in any type of investing, whether it's investing as you're building up your worth, as you're transitioning into retirement, and then also the momentum that can come and go. If you remember years ago around GameStop, and that's where this idea of fear of missing out came from, and momentum investing and sticking it to the man and all that stuff. GameStop was one where there was no basis at all to buy it, but there was a big following behind it, and that's why people bought it and drove the price up. And there's a whole story around that. But there's the emotional side is what I'm getting at, the emotional side. And I want to talk about that feeling for a second because I think it's important. We had a client call us uh, not long ago, wanting to talk about SpaceX and was it a good thing to think about adding to the portfolio? And what they said, well, this is really the reason for telling this story is I've heard a lot of people talking about it, and I just don't want to miss out on this one. And I hear that. I completely understand it. These are names people know, companies they believe in, and they're the very human feeling of wanting to be a part of something that feels like the future. And when you hear about SpaceX and what they want to do and where they're going to go and put us on Mars and change the face of internet and data centers out in the space and these things that 10, 15 years ago were not in anyone's brain, and now it's all we talk about. And you want to be part of it. I think there's nothing wrong with that, but it's worth separating that feeling from the actual decision. The question I always ask is this a good company or is this the right decision for your plan right now? Because those are different questions. You can believe in SpaceX or Anthropic or OpenAI as companies and still decide that buying them at IPO price in week one isn't your retirement money. It's not where your retirement money belongs. Believing in a company and owning it at any price at any time are not the same thing. And there's a difference between long-term conviction and the fear of missing out. One is strategy and the other one is emotion. And so, I mean, I don't think there's a never buy this. I don't think there's ever a never buy of any investment out there. I think there's always reason to question and think about what is good for my plan and, what do I want to take a little bit more risk on and where do I want to be a little bit more conservative. Um, but I mean, just think about the potential of waiting for a second. If most IPOs, even the big names, have volatility in the first year and some experience a 50% drawdown, and you happen to like and feel convicted about the journey of SpaceX and where you think they could go, or Anthropic or OpenAI, well, would you rather buy it at the beginning and go through that 50% downside, max drawdown that's experienced in the first year, or would you maybe want to wait it out and just kind of see how it moves before you get in and now have that long-term conviction with it because you like the company and you want to invest in it for the long term. So just a little bit of food for thought there. So before I wrap up, I want to leave you with three questions, and these aren't just for SpaceX. I would say use these every time that any type of IPO or any type of fear of missing out type of scenario comes around. Question one is this money I won't need for at least 5 years? If there's any chance you'll need it for income or expenses before then, the kind of volatility that comes with a newly public company just may not be worth it. It's probably not a fit for your portfolio. Question two, do I actually understand what I'm buying? Not just the name and the excitement around it, but do I actually understand what I'm buying? If I'm going to buy a company for the long term, I want to know a little bit more than just the name and what their general purpose is. I would want to understand that company a little bit more, which is going to help build my conviction. And so when there is an emotional roller coaster or a stock market roller coaster around that particular stock, your conviction can be there that, yeah, I did the research and I still maintain that I believe in them long term. And then question three, how much of my overall plan is this? A small intentional amount in the longer term growth portion of your portfolio, is a completely different conversation than putting a meaningful slice of your retirement savings into something that could experience a 50% loss within the first year just based off of the history. When cryptocurrencies back in say 2020 to 2021 took a lot of media and headlines, and everyone said you got to buy Bitcoin, it's the next big thing. We still kind of took the same stance I would take on getting into an IPO, which is it needs to be a portion. If you're going to invest in it, it shouldn't be a tremendous portion of your overall net worth. For most of our clients, we kind of kept that recommendation for cryptocurrencies to really no more than 2 to 3% of your liquid net worth. not because it doesn't have a future, but because of how volatile it is and how speculative it is. So I go back to SpaceX. While it has a little bit more backing of what it can do, and it's not such an unknown than, say, cryptocurrencies, but a lot of the valuation is based off of, something that's probably going to take them tens of years to figure out. And is it all possible? I think it is all. I hope it's all possible. It sounds talking about the idea of space exploration and the way that they talk about is something that I hope does come to fruition. And but again, it becomes one of those things of how much. So I am convicted. I think it's a long-term buy, but how much of my portfolio am I willing to risk? And really the answer needs to be something that's not going to change my life, something that's not going to uproot my retirement income plan, something that's not going to make me think about having to go back to work because I made a bet on this company. Make bets on the companies when you're in your 20s, 30s, and 40s. When you start to transition and you've built up the wealth and you know how hard it took, how long and how hard it took savings and the dedication and the trade-offs to get to where you are so that you can retire comfortably, or you are retired and you are living comfortably. Now may not be the time to take those big bets as you get closer to it. So again, this was really one that I think it would with SpaceX around the horizon as far as the IPO and all the talk and the chatter, and it seems like the next best thing to hop into. I think regardless of what happens, do your due diligence. If you'd like to talk to us, we're happy to have a conversation with you about, hey, what could be the right amount based off of my net worth and my liquid investment worth and my financial plan. What could be the right amount that's not going to be detrimental to me, but do the research and be convicted if you want to be convicted. But the big story here is don't make that emotional buy-in that I think a lot of people are going to do and potentially regret of well, everyone else is doing it, so why shouldn't I? Well, I hope you got something out of this today. And as always, if you want to have a conversation with us at Peace of Mind Wealth Management, we are happy to do so, whether it's around SpaceX or your portfolio or what a financial plan looks like. All those different things that we talk about on the podcast, we are happy to engage with you. Easiest way to do so, head to our website, pomwealth.net, and you'll be able to set up a call with one of our advisors. And from there, we'll be able to determine if there is something that we can do to help you out. And we'd be very happy and honored to have that conversation with you. But until then, thanks for tuning in, and we will talk to you again next Monday. Take care.
If you would like to find more information about Peace of Mind Wealth Management, we invite you to visit our website at pomwealth.net. If you go to the contact page and contact us, we'll send you a free copy of our book, The Peace of Mind Pathway. It lays out our process from beginning to end. Please visit our website.
For more retirement tips, check out these videos. Also, if you find them valuable, please subscribe to our YouTube channel and give us a like.